Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Wednesday, it's November 8th, and it's about 7:40 in the morning. The market's going to gear up to open up in about an hour and 50 minutes. Yesterday, I had the wrong earnings sheet, and I read you earnings from last week, and it confused a lot of people. I'm really, really sorry about that. I think that's the first time I've ever done that. To show you how busy, confused I've been with this time change. This time change is messing with my head. Anyhow, we're here. The market's a little bit lower. Let's get into what we need to focus on today. First of all, you've got petroleum status report. It'll answer the question of whether or not energies are going to continue to make a 4.5-month low or a 4.75-month low. They've been going up and down. The volatility has been horrendous. We also have wholesale inventories, and we have John Williams and a bunch of Fed speakers, including Squirrely Powell. Tomorrow you got Bostic, and then Friday you got Logan and Bostic again, and then you got Barkin on Thursday. A lot of Fed speakers, so keep your eye on the bond market. Speaking of the bond market has been holding above the 8-day EMA, but trading below the 50-day EMA. Now, here's a good clue for you. If we start trading above the 50-day moving average, it's going to reflect the fact that bonds believe that Fed's raising is behind us. Now, the problem is the Fed and the bond market may not be agreeing with one another. And if that's the case, you may end up getting a big drop down later on if the Fed thinks that we need to raise rates. So be careful. Right now, at least for the last couple of weeks, the bond market's been doing all the nasty work for the Fed, but now it's backing off. So we got to watch it carefully. You could get a nice little boost from tech if we break above, because that means yield is going lower, which means there's less pressure on the market. But be careful, and watch this 50-day line carefully, because this could be a major catalyst to a bull run in the market, because this means interest rates are declining. All right? Very, very important. Now, we could just kind of hummer around here and cool off. Volume was really bad the last 2 days. So we could turn around, and there's a lot of resistance at this 50-day line. So be very, very cautious. But so far, it's looking pretty good. So keep an eye on that. Very, very important. Earnings. This time I got the right calendar. You got Disney, you got Roblox, and you got MGM. This is a big swing trading, day trading stock, RBLX. But MGM and Disney, they're coming out today. Not sure if they're coming out after the opening bell or the closing bell. We can get a good gauge right now. But that's on the table today. Not much. Also sitting at the 50-day moving average. And what was that other one? It was Disney. Yeah, Disney's going to be a big one. Not expecting anything great from Disney. Oh, sitting right at the 100-day moving average. So both of them are sitting at key moving averages. I'm assuming, based on what I'm seeing right now, that both are going to be reporting after the market closes. Now, let's talk a little bit about global economy, and then I'll get into technicals, because I do have quite a lot to talk about today. So, and by the way, I think you'd find this interesting. The run-up we've had in the stock market, right here, this run-up, this has been the fastest gaining run-up we've had in the stock market in a year, exactly 1 year. So typically when you see a run-up like that, actually November of 2021, 2 years since we've seen a run-up like this. So if we pull back a little bit or consolidate around here, it wouldn't be a big surprise, especially because look at where we're at. We're right at that 100-day moving average, and then there's the 200-day moving average. And volume has been going down. So to me, I think these are going to be resistance levels, and they're going to start pulling us a little lower. We may get a little up to a little confusion like this to make it look like we're breaking through and then coming back down again. But I would be very cautious today, because there's no major catalyst. Big cap earnings are behind us, and you don't have one point of resistance. You have two. You have the 100-day moving average, and you have this pesky red dot or line that I drew yesterday, which has so far held pretty well, and we're right below it. So keep your eye on that 100-day moving average, and keep your eye on volume today. Because if volume is low, like it's been the last 2 days, and it's been low, you're not going to get any commitment, you're not going to get any follow-through, and it's going to make it really hard for day traders like us who, swing traders, day traders, because you don't have any follow-through. All right, so let's talk a little bit about what we can expect, and then I'll go back into the technicals. I guess I got ahead of myself there. So investors are looking ahead for Mr. Squirrely Powell for further clues on the economy. We're also looking at earnings from Disney. The S&P is now at a 3-week high. Blue chips and tech are at a 1.5-month high. And as I warned you, this has been the biggest 7 or 8 day rally we've had in 2 years. So Keep an eye on that. Remember, markets, as much as I love to tell you they're trending, markets are reversion to the mean markets, and we're near the 100-day line and major support resistance. So it's going to be very interesting if we pop through, and keep your eye on volume, because volume hasn't been showing any commitment last 2 days. So in Thursday's session, 3-week high in the S&P, blue chips and Dow, 1.5-month high. Crude oil dropped 4% to a 3.5-month low. We called those out yesterday. Economic data showed that U.S. September trade deficit increased to $61.5 billion. And credit card debt is now at $1 billion, over $1 billion. So things are not really getting all that great in terms of the big picture. Goolsbee said yesterday that top priority is returning inflation to the target, and they don't want to pre-commit. I don't blame them at this point. They've been pretty aggressive. Waller described third quarter economic growth as a blowout performance, emphasized the central banks was closely monitoring these figures when thinking about policy going forward. Bowman said she continues to think central banks will need to increase rates higher to curb inflation. I agree with her, but it's going to take a little while, and they're going to stay inflated longer than people think. But she also noted a surge in Treasury yield since September has resulted in more restrictive conditions. I agree with her as well, but they are cooling off right now. We're only showing almost a 15% chance of a 0.25 basis point rate hike in December. Don't think it's going to happen this year. I think they want to try to preserve an end-of-year rally so they have something to work with next year, and they could say, well, under our control, the market actually did pretty good. They do. They act like they don't care, but they do. You've got Disney, you've got Warner Brothers, you've got Biogen, you've got Take-Two. It's going to be a busy earnings day today, but if we have low volume, it's not going to be pretty. Jerome Powell is going to be talking today at the Statistics Central Conference later today. We'll be paying attention to what he says. We've got wholesale inventories, and we also have petroleum status report. That's happening at 10:30. Now, keep in mind, this report happens at 10. Notice I don't take any trades before 10 because I want to wait for these reports to come out. The petroleum is not going to be a major impact on the broad market. It's going to be a big impact on energies. So I don't want to trade energies till 10:30 unless you already have them. But again, one of the biggest reasons why we don't take trades till at least 10 a.m. is because we want to have the market show its hand. And it does that really well during the first hour. Europe is down. We're not going to get any tailwind from them. Investors are assessing economic data, corporate reports, cautiously awaiting from Jerome Powell. We may get a very subdued market till he speaks today, although I don't think so because it's not a major talk. China closed slightly lower as concerns about the country's economy outlook persisting due to a string of economic readings for October, even as Chinese authorities remained optimistic about the world's second economy. They're just not doing great. They're struggling. And it would be weird if they weren't struggling, or at least they're not lying to us, but they are struggling. They've had so much pressure put on their economy. Japan closed lower today, giving up early gains as investors continue to lock in profits after a recent sharp rally. I think that's kind of what we're going to be seeing here. Energy stocks led the decline on Wednesday as oil prices dropped to their lowest level since late July. It's been pretty bad. Now, I wanted to show you how the sectors look right now, just to give you some perspective. So 3 weeks, technology, utilities. Look at that. I mean, right away, technology, utilities, home builders, consumer staples, semiconductors. I mean, have you ever seen home builders, utilities, and technology in the same, and semiconductors in the same list? This is what I mean. It's like someone took a bag and just shook it. Over the last week, we've been seeing a little more consistency because it went down and then it went straight back up and just mixed everything up. Semiconductors are leading right now. Texas Instrument is not cooperating. Home builders, consumer discretionary, technology. You could see tech is roaring back. Communication is roaring back. On the downside, consumer staples, utilities, industrial, healthcare, the Dow Jones. So the last few days, tech has been roaring back. It's been really roaring back. But over the last 6 weeks, tech, semiconductor, QQQ, tech. Now look, over the last 3 weeks, utilities, home builders, consumer staples, and then over the last week, semiconductors. I mean, it's, I get emails saying, Roger, how come alpha rotation, your rotation strategy that trades ETFs, isn't doing great? Because the markets are doing this. Once it starts trending, it will again. But with the markets doing this, it's very hard for sectors to gain a strong trend because you don't have any. I mean, you have no relationship considerations here. I mean, I know these things cold, and usually you have energy And usually you have home builders next to it, and you'll have financials next to it, and real estate next to material. It's completely out of whack. I mean, it's so out of whack. I've never seen it so out of whack. I mean, there's absolutely no relationship between these if you're looking at a 3-week period. I mean, it's like someone literally took the bag and just shook it up. So we have to be careful, and we have to let the stock dictate its direction. And one of the reasons why I've been giving you the alpha rotation top stock is because of that, is because we haven't had strong trends. So I'm giving you stocks that are, in fact, trending. But for all intents purposes, look at the rally, the gain we've had in rally. Now, we should probably have a pullback after this, but this has been substantial. Now, look at utilities. Home builders, nothing. So technology is very strong. Semiconductors are very strong. QQQ, as a result of these two, is very strong. The Dow Jones is coming back. What's been lagging? What's been really, really lagging? The Russell 2000, I told Matt to sell this yesterday. I don't think he listened to me. I'll tell him again. Industrial has been lacking. Energy, energy's breaking down. Basic materials, mid-cap, small caps, basic materials, and energy have been doing, and industrial have been doing really bad. Growth, basically U.S. growth. Mid-caps, those are growth stocks. Basic materials, that's economy growth. Energy, well, we know where energy is. And industrial, and look at the Russell 2000. This actually looks just like the chart of Texas Instrument. All right. The point is, it's very hard to make heads or tails with sectors right now. We know that technology is leading. We know that industrial and basic materials are lagging right now. So let's try to find a good long and a short for us, okay? Let's see how long this takes. All right, let's see here. Oh, there's some good juicy ones. I'm going to give you two that I really like right now. I'll give you three that I really like right now. And I gave you one of them already yesterday in the VIP room, in the Telegram channel. Cardinal Health, EDU, ANF, and BRBR. Look at the volume here. That looks good. Look at the trend here. That looks great. And it's got volume. Look at the trend here, and you have volume, even when market volume was low. And here, yeah, you have a little volume, but great price action. Look at this price action. Not choppy like this, nice and smooth. So CAH, I gave you an option spread. Look at the Telegram channel yesterday on the free one. EDU, ANF, and BRBR. Now let's look to the downside. Let's look at the 50-day lows. Oh, look at the energy breakdown. Okay, Mosaic, Oceaneering, Mosaic and Oceaneering. Let's see if there's anything else. I would be careful with energies right now, only if they start breaking the low. But right now, honestly, Moss and Oceaneering. This would be my number one choice right here. Yeah, because it's breaking below that level. Maybe give it a little more. Moss and Oceaneering. Make sure they both break the low before you go short. But I like these two to the short side. And it's good right now to have some exposure to the short side and to the long side. Now let's talk about price action here real quick. Where's my chart? There it is. Okay. Be really, really careful with the S&P 500. We have the 100-day moving average, and we have this resistance here, and we don't have really anything major today in terms of volume or opening. Looking at the QQQ, we're above this level, but again, volume is very low, and it doesn't seem to be committal. It looks like we have a lot of price action right here. Look, right here. A lot of resistance here, a lot of resistance. So we got to be really careful, because if we go up a little higher, we're going to break into this area, and that's a lot of congestion here. And as I said, the S&P is not looking good. So I don't mean to be bearish. We may go rock and roll to the upside, but I would start getting a little nervous, not because I'm a bear or not because I'm trying to pick the top here, simply because we've had so many days that have been up, the biggest in 2 years. And again, we have this resistance, we have this 100-day moving average, and we have on the QQQ a lot of price action right here in this area right here. Let me just draw this for you. right here that will reflect on where we are at right now. So be careful. Now, before I let you go, craving the insider's edge of a Wall Street whiz? Tired of old trading slip-ups haunting your portfolio? It's time to unveil my Pro Trader dashboard. Your trading revolution. It isn't just a tool. It's years of market expertise, almost 30 years. It'll be in January, 30 years to be exact, condensed into over 3,000 lines of precision code. Copy, paste it into your Thinkorswim, and watch the transformation begin in your trading. I'm talking about crystal clear price action, relative strength, pure unadulterated logic. It's all baked in. Strip away all that glutter of gimmicky indicators. Zoom in on what truly counts for day trading. Yes. Are you ready for the ultimate market advantage? It's here, and it couldn't be simpler. Stay alert. Get a clear picture of what's happening, including volume. Follow through. Watch as the dashboard helps turn the tide in your favor. Click the link below for the full scoop. Click the link below right now for the full scoop, and I'll help you take your trading to the next level. And if you haven't been convinced on it yet, the feedback has been amazing. I'll see you guys in the VIP room at noon. I apologize about my calendar yesterday. Keep an eye on Disney. Keep an eye on Disney and keep an eye on those levels that I talked to you about. We may have a little pause or a big breakthrough, but it needs volume. I'll see you guys later. Bye.